Hey everyone, and welcome. Today we're diving deep into a company called USA Rare Earths. Now this is a company that sits right at the intersection of America's tech future, our green energy goals, and believe it or not, our national security. So for any American investor trying to understand the strategic landscape, this is one you'll definitely want to get your head around.
So let me just start by asking a huge question. What if the critical parts for everything from advanced fighter jets to the electric car in your driveway, what if all of that depended on a single American-made supply chain? Well, that's exactly the future that USA Rare Earth, or USAR as we'll call it, is trying to build.
All right, here's how we're going to break it all down. First, we'll unpack the company's huge mind-to-magnet vision. Then, we'll pop the hood and look at the hard financials. After that, we're going to zoom out to see the global race for these minerals, look at how Washington is placing its bets, and then finally, we'll get to the high-risk, high-reward verdict for you as an investor.
First up, let's get into exactly what USA Rare Earth is trying to pull off. And I'll tell you, this is way more ambitious than just digging some rocks out of the ground. They're trying to fundamentally reshape a critical American industry from the ground up.
Okay, so here is the absolute key thing to understand right off the bat. USAR is a development stage or pre-revenue company. That means they're not actually selling anything yet. Their entire mission is to create America's first vertically integrated supply chain, meaning they want to control the whole shebang, from the dirt to the final high-tech product, all within the US. So here's how they plan to do it. It's this three-step mine-to-magnet model we're talking about. Step 1, they mine the minerals at their massive deposit down in Texas, called Round Top. Step 2, they refine those raw materials right here at home, which is a crucial step to break foreign dependence. And finally, Step 3, they take those refined materials to their facility in Oklahoma and manufacture what are called NDFB magnets. These are basically the super magnets, the strongest kind, that are absolutely essential for high-performance motors.
All right, now for the part every investor really wants to see, the numbers. This is where the big vision meets the hard reality of the balance sheet. The first, and you could argue the most important number to wrap your head around, is this one, 0. Because again, USAR is a pre-revenue company. They are not yet generating any income from sales.
And, building this dream isn't cheap, not by a long shot. In just the second quarter of 2025, the company posted a net loss of over $142 million. That number reflects the huge startup costs of, getting mines, refineries, and factories up and running. So how are they paying for all this? Well, as of August 2025, they had about $128 million in cash on hand. You can think of this as their financial runway. And when you look at their net loss, you can see just how quickly they could burn through that cash. And this leads us to a really big risk for anyone holding the stock. To raise all that cash, the company has massively increased its total number of shares by over 200% in just the last year. That's what we call shareholder dilution. And it means that each individual share you own now represents a much smaller piece of the total company pie. Okay, so now that we've seen the company's books, let's zoom way out. Why is there so much attention and so much money being thrown at a company like this? It's because we are in the middle of a global competition for the very materials that are going to power our future. These aren't just some obscure elements you forgot from chemistry class. They are the secret sauce in our most important technologies. We're talking about the motors in electric vehicles, the generators in wind turbines, the guidance systems in military drones, and even the little motor that makes your smartphone vibrate. These high-power magnets are literally everywhere.
And this chart, wow, this chart tells the whole story. It's the core geopolitical problem that USAR was basically created to solve. See, it's not about who has the minerals in the ground, it's about who can process them. And right now, China controls a jaw-dropping 90% of the world's refining capacity. That gives them enormous leverage over pretty much every advanced economy on the planet.
Now, a vulnerability like that, you can bet it hasn't gone unnoticed in Washington. The US government has woken up to this risk in a big way. And that political reality is now acting as a powerful tailwind, pushing companies like USA Rare Earth forward. This isn't a Republican thing or a Democrat thing anymore. There is a solid consensus in Washington that relying on a geopolitical rival for the basic building blocks of your military and your economy is just an unacceptable risk. So onshoring this supply chain is now a top-tier strategic priority. And this isn't just talk, right? The government is backing this up with real action. We're seeing everything from Department of Defense investments and grants from the Department of Energy to new policies aimed at speeding up the incredibly slow process of getting a mine permitted in the US. All of this helps to de-risk a massive project like the one USAR is undertaking. So let's put all the pieces together. For you, the investor, what does this all mean?
how do you weigh this incredible potential against some pretty serious risks? Let's lay out the whole investment case.
First, you got to know who they're up against. You've got established players like MP Materials and Linus. Now, they're already in production, selling products. USAR, as we've said, is still in the development stage. But its key differentiator, its potential trump card, is that goal of full vertical integration. The whole process, from mine to magnet, all on American soil. Nobody else is doing that right now.
So it really boils down to this classic tug of war, right? The bull case versus the bear case. The bull case, the dream, is that USR becomes America's first fully domestic champion in a vital, booming market, with the full support of the US government. But the bear case, the reality, is just as stark. This is a company with zero revenue, a high cash burn, it's diluting its shareholders, and it faces massive risks just to get its operations off the ground.
And for those of you who follow the technical side of investing, all the recent excitement around this stock has definitely shown up in the charts. Its Relative Strength Index, or RSI, has recently pushed just over 71.
So what does that mean? Well, in Wall Street jargon, an RSI reading above 70 is typically considered overbought. It's basically a technical flag suggesting that enthusiasm might have pushed the stock's price up a little too far, too fast, and that it could be due for a short-term correction or a pullback.
Which leaves us with this one massive question. Are you looking at the ground floor of a future American industrial champion that's solving one of our biggest national security problems? Or is this a super high-stakes speculative bet that could simply run out of money and momentum before it ever crosses the finish line? The truth is, the answer will come down to one thing: execution. If you found this helpful, please subscribe.